You're not going to believe this, but remember that commercial real estate building I was excited about in my last video? Well, I just spent 2 days going through all the documents the agent sent over, and I found some things that surprised me. Oh, this building is beautiful. It's brick, it's on Main Street, perfect location. It's 2 stories, the tenant's already in place, and the listing price is $585,000. So the agent mentions to me that's, $46,000 in passive income right there. But the thing was, and I stayed up way too late reading through all the lease agreements and the tax documents. Yes, I actually like doing that. There's at least like 5 major issues that I didn't notice right away. And honestly, most new investors would have missed all this stuff too. It actually gave me a flashback to like my very first real estate deal. I was looking to buy a duplex and it seemed like it was in a great neighborhood. And when we walked into this thing, it looked like one of those bad home renovation shows. Literally, the basement walls were like sort of caving in. They had these like metal bars keeping them up. And there was, for some reason, a window like right in the middle of the shower. Like somebody thought that was a good idea. And then, of course, they didn't show pictures of the kitchen. So the kitchen had these like orange countertops and green cabinets, something out of the 70s. So needless to say, I walked away from that deal and I was disappointed. But then like a week later, I found an even better property right across the street. And that was my first real estate purchase. So what I'm saying is the lesson is walking away isn't always a bad thing, but I still want to dig into this Main Street property a little bit. So I emailed the real estate agent and I wanted him to send me over all the numbers, all the details. So here it is. This property is 5,118 square feet and that's split between 2 floors. I asked, there's no basement, there's no roof access, and the first floor has this learning center as a tenant. It's the kind of place you would go to take your kid, or maybe you went there when you were little just for like extra tutoring, help with math or reading. And that tenant, it pays annually for the lease $46,400 a year. And that lease is locked in till 2027. So I'm thinking, all seems pretty good to me so far. But then I noticed something in the lease agreement that just doesn't make sense. If you remember in my last video, I was all excited about learning how triple net leases worked, and that's where the tenant pays everything, like the insurance, the taxes. Well, that's the catch. It's all in the fine print. Hey, drop a light bulb emoji in the comments if you've ever found something in the fine print that changed everything for you, because that's what happens next for me. You see, in the lease, there's this thing called tax base that's set for exactly $16,052.53 per year. Now, at first I had no idea what that means, so I pull up the actual tax bills from the town website, and it turns out the real taxes are way higher. We're talking thousands of dollars different. And that difference would end up coming straight out of that passive income that the agent mentioned to me before. You see, in the lease, the tenant only pays increases above that tax base amount. And we'll get into that more later, but I grab my calculator and I start running some numbers. Want to take a guess at how much the actual tax bill is? I'll give you 3 seconds. The actual tax bill from the town website is more than $10,742, and that's just for the school taxes alone. We still have county taxes. So remember that $16,000 and some change base in the lease? The tenant only has to pay half of any increases above that. So the property taxes have literally doubled because the assessment, it went up from $460K to $920K. And the worst part, I'm finding all this out when I called the assessor's office. The nice woman on the phone, she told me that the rates are probably going up again next year. So these property taxes are wild. When I was looking at my residential properties, the ones that I own already, I never really thought about how the tax assessments worked. But when I was at this conference, I mentioned it in the last video that I attended on commercial real estate, the investor who was on stage, she actually showed me how she challenges her commercial real estate assessment and taxes almost every single year. She was saying it's important not to do that just the year you first buy it, but every single year. She actually ended up the most recent year getting a 30% reduction because she keeps a record of all the similar properties that sold that are actually sold for less than whatever their assessed value is. And I got a feeling this property, this Main Street property, that's what's going to end up happening too. So anyway, she said that she just brings those numbers to the assessor's office. She shows them like, hey, you're wrong. And again, there's a time of year to do this, but she said she does it every single year. But what's really interesting about the property that I just toured is that I finally got to see the second floor. There's no pictures or anything of that online. And it used to be a lawyer's office, but a small one. Like, you go upstairs and they only use like 25% of the space, and the rest is just wide open. It's like a blank canvas. It's essentially like the whole thing is empty now, but it's essentially just completely empty. So that's when my mind starts thinking that this still might be a good deal. You see, like right now, I'm recording this YouTube video and we're actually at our old house. Now, don't get me wrong. It's awesome to have a recording space. It's dedicated. I've got the cool lights, the microphones, but it's not ideal. I've always imagined having that, real YouTube studio right on Main Street, professional lighting and sound treatments on the walls, and a podcast setup for guests to come in and be interviewed live. And then, my wheels kept turning. My wife, she has her aesthetics business. I was thinking a small portion of that space could be perfect for her too. It's professional, it's accessible, it's right in the heart of town. And then some of you also know that I've always had this dream of having a co-working space for other like-minded people like me. Creative professionals, maybe healthcare people, someone with a side hustle. Really just a space to get yourself out of the house, get work done with other awesome people. So let me show you how these numbers could actually work. That first floor, like I mentioned, pays the $46,400 per year, guaranteed through 2027, and that's the Learning Center. And the second floor, which is completely empty, is 2,300 square feet. And right now, the going price for that is between $18 and $20 per square foot. So that second floor revenue could be another $46,000 annually. And then I found something interesting in the lease agreement. You see that current tenant has been there for a while, and the renewal options in 2027 say that they can also renegotiate that tax base. So most people would see that as a red flag, but with the property taxes basically doubling from that high assessment, I'm wondering if we can use these numbers to negotiate a better purchase price, a lower purchase price. And so where I'm at right now, I'm kind of making this list of negotiating points. The tax assessment's doubled, that's leverage. The empty second floor, that needs renovation. And there's even these vestibule tiles mentioned in the lease that probably need to be replaced. And I got a contractor quote for that. It's over $15,000. Every single one of these things could be worth thousands of dollars off the purchase price. So it's worth bringing up. And I am looking at this deal from essentially three different angles. Yes, it's an investment, even though there's those tax issues we've talked about. As a business owner myself, having a professional space on Main Street would be awesome too. And then, as a community member, an entrepreneur in the community, having that space for like-minded professionals really would be something special and awesome, for me and my family. When I started looking into commercial real estate, I really just thought it was an investment, a place to put your money, different than the stock market. But now I'm thinking it could be something way bigger, way better, pretty awesome. Let me ask you, what would you do? A, walk away from this deal. B, maybe negotiate a better price. I'm really curious because I'm still deciding, so let me know in the comments. Oh, and I'm meeting with my accountant next week to talk the tax side of this deal. He mentioned cost segregation, so why don't you hit subscribe if you want to hear how that conversation goes. Honestly, I've learned more from analyzing this one property than I did from months and months of just reading about commercial real estate online. Remember, I'm learning right alongside you, and I'll be sharing everything I learn right here, so don't forget to hit subscribe.